Hey everyone, welcome back to Corporate Dakota, the place where we unravel the confusing world of finance and tell you what it all means. You know, those times when a company gets a loan that almost sounds too simple to be true. Well, today we are looking at a filing that makes you wonder if they found the deal of the century, or maybe just a really strange one. Today we are diving into a filing from Healthcare AI Acquisition Corp. This is a company that's basically set up to buy other companies specifically in the healthcare technology space. They put their own money and other people's money into a fund and then go hunting for a good deal to merge with. Think of them as professional matchmakers for businesses. So what's the big news here? Well, it's about a loan. On August 19, 2025, Healthcare AI Acquisition Corp, or the company as they call it in this paper, received a loan. This loan is for a rather modest amount, 350 FIV 220 SIT. It's to help them with their day-to-day operations, you know, things like paying the bills or keeping the lights on. Now, what makes this interesting is the company they borrowed from Leading Group Limited, which is based out in the Cayman Islands. And get this, the loan is unsecured, meaning there's no specific asset backing it up if things go wrong. But here's where it gets really peculiar. This loan doesn't charge any interest, that's right, zero interest, and it's due to be paid back not on a specific date, but when something called a business combination closes. They've been working on a deal to merge with another company called Leading Partners Limited since last year. So essentially, this lender is giving them money interest-free with the promise of getting it back whenever this merger finally happens. You don't see that every day. Usually lenders want to get paid for the risk they take, and borrowing money for free is like finding a unicorn. Now this filing is basically an update to let everyone know about this loan. They filed the actual loan document as an exhibit for anyone who wants to read the fine print. It's worth remembering that these special purpose acquisition companies, or SPACs like Healthcare AI Acquisition Corp, exist to acquire another business. So this loan is likely meant to keep them afloat while they finalize their acquisition. Before we wrap up, let's touch on the company's structure. Healthcare AI Acquisition Corp has different types of shares and warrants. They have units which are a package deal of one Class A ordinary share and half a warrant. Then they have the Class A ordinary shares themselves, and then the warrants. Warrants are like options. They give their holder the right to buy the company's stock at a set price in the future. It's a common structure for these SPACs to raise money. These different pieces trade on the stock market under symbols like HAIR for the units, AIF for the shares, and HAIDA for the shares, and ACADOF for the warrants. These are how investors buy and sell their stake in the company's potential future acquisition. Now, the company has checked the box that says they are an emerging growth company. This means they are a smaller company and can take advantage of some lighter regulations compared to bigger established corporations. They have also opted not to use the extended transition period for complying with accounting standards, which suggests they want to be upfront with their financial reporting. So let's break down what this really means. We have a company that's in the business of acquiring another business, which is a high risk, high reward game. They've secured a small amount of working capital through a loan that has no interest and a repayment tied to the completion of their acquisition deal. You could see this in a couple of ways. On one hand, it shows that the lender Leading Group Limited is quite invested in this deal going through. They are willing to bet on the success of Healthcare AI Acquisition Corp's merger and are essentially funding their operations interest-free until then. This could be a sign of strong confidence or perhaps a strategic move by Leading Group on the success of Healthcare AI Acquisition Corp's merger and are essentially funding their operations interest-free until then. This could be a sign of strong confidence or perhaps a strategic move by Leading Group. On the other hand, the small loan amount of just over $3,000 might indicate a few things. It could mean the company has limited immediate cash needs or that it's still very early in its operational funding stage. The absence of interest is the most noteworthy aspect. It's unusual and might suggest a pre-existing relationship between Healthcare AI Acquisition Corp and Leading Group, or very favorable terms being offered. However, we do know that if the business combination does not happen, the lender still gets their money back in cash. The real test for Healthcare AI Acquisition Corp will be the success of this business combination. If they can't find a suitable company to acquire, or if the deal falls through, then the SPAC's purpose isn't fulfilled. And often this leads to a liquidation where investors get their initial investment back. This loan is a small piece of the puzzle, but it highlights the company's reliance on that upcoming business combination for financial milestones. Looking at the overall picture for Healthcare AI Acquisition Corp, It's in the very speculative realm of SPACs. Their value isn't in current operations, but in their ability to execute a merger successfully and create value in the acquired company. This loan is a small operational detail that shows they are moving forward, but it doesn't fundamentally change the high-risk nature of investing in a SPAC. The key risk is always the deal failing. If the merger doesn't happen, investors likely get their money back minus some fees, and the company essentially ceases to exist. The benefit of this interest-free loan is it keeps their overhead low while they try to get that deal done. Now, looking at these results more broadly, Healthcare AI Acquisition Corp seems to be in a very early stage. Their current financial operations are minimal and highly dependent on external financing events like this loan and the ultimate business combination. The main risk here is the completion of that business combination. If it falls apart, the company essentially dissolves. An opportunity lies in them finding a strong healthcare AI company to merge with that has substantial growth potential. The direction of the company is entirely dependent on finding and merging with the right target. This interest-free loan is a small positive in managing their minimal operational costs as they pursue that critical merger. Alright, that's our breakdown of Healthcare AI Acquisition Corp's latest filing. What's your take on this unusual interest-free loan and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.